Inflation is cooling, but not enough. The latest PCE numbers show a slight drop, yet the Fed isn't budging on rate cuts. With consumer spending shifting and no major progress toward the 2% target, what's next for interest rates? Today, we're breaking it all down.
Gary, moving on to thing number 3, we're talking PCE, personal consumption expenditures. We see them falling. And Gary, one of the questions you're going to answer, what do we think this means for the Fed? Thing number 3, Gary, we're rolling into fresh PCE numbers.
So, Rob, the PCE stands for the Personal Consumption Expenditures Index. It's the preferred inflation gauge that the Federal Reserve tracks. And the reason they focus on that one is it tracks the prices of goods and services bought by a typical household. It most closely reflects people's actual inflation experience, which, nobody has the exact inflation experience of the CPI, the Consumer Price Index. So because it reflects the consumer experience, that's why the Federal Reserve focuses on it. And so the PCE for last month showed a year-over-year increase of 2.5% in January. It was down 0.1% from last month. The core PCE number, that excludes food and energy, came down to 2.6% year over year. That was also in line with expectations. But the key thing here, Rob, is there has been almost no progress on any kind of disinflation, let alone deflation, over the past year. And it's also important to note that while the January PCE was below the December reading, the monthly change was up 0.3%. And again, that doesn't sound like a big number, but it annualizes at 3.7%. And so, when we look at that, it's just very clear the Fed is not making the progress they hope to.
So, Gary, we're seeing the PCE falling. Going back to what I mentioned, the Fed. What does that mean for the Federal Reserve?
I think what it means is they're going to stay on pause. There's going to be no new inflation data coming out between now and the next Fed meeting. And so barring something really strange happening in the next, few weeks, we expect the Federal Reserve is going to keep the Fed funds rate exactly where it is right now. Inflation is too high for them to keep lowering rates. But, as we'll talk about later in the show, the private market economy is really struggling. And I think raising rates is going to be rough for people right now. So I think the Fed is going to pause. That is the consensus opinion right now. For the horrible inflation that we all experienced in 22, 23, the first half of 24, that was a situation where DKI had a different view than the market. And we were saying higher for longer when people were screaming for rate cuts. But everybody isn't wrong all the time. And right now, I agree with consensus. The Fed is going to stay pat where they are right now.